Yo, what's going on, everybody? What's going on, everybody? Welcome back to my channel. My name is Erik, and here with the investment channel, guys. Today, I'm going to be talking about STG. This is a stock that when I was in Turks and Caicos, I picked up, which is a Chinese penny stock. I've been getting some questions. If Erik, are you still holding? Yes, I am still holding. I've actually been buying it. Right now, I have about 1,300 shares. And I feel like it's literally just undervalued, especially like looking at some other plays of like how they're reacting to the market. I feel like in a few, maybe few weeks, and depending on like how earnings, because we have earnings this week, depending how it goes, we might be going back to like $1.50 or even like up to $2 in my opinion. Now, let's see what's going on here. So as you can see, I'm still holding it. So I have 1,300 shares, a portfolio diversity of about 2.58%. It's one of those things that I tell you guys, it's all about like risk management. If we know that penny stocks are risky, okay, they're very risky, and you could lose a lot of money on those. So it's all about, just making sure that you can tolerate the risk. So as of for now, it's sitting at $1.22. I have an average cost of $1.44 because when I told you guys it was right before the crash or the correction, whatever you want to call it. And I've been just buying and buying. We can go back down here. So yeah, as you can see here, just been buying. So that's pretty cool. So let's see here. What's going on? What is going on? All right. So you might be asking, what's STG? What do they do? So STG, or Sunlands Technology Group, provides online post-secondary and professional education. Um, and we know, as of for now, we can see how like COVID has affected everything. And I believe that online education will continue to grow in the future. And this is what I'm betting on, and I can show you right now. As you can see, my total return is negative right now because, well, it's below my average cost, but I'm not even worried about it. But let me show you something else. Let's look at something here real quick. So let me look at the financials before I show you something else. So right now, if it's not, it's right there. So we can see that they have about $1 billion in cash. Okay, it's a lot, but if we go back to December 2019, they had a lot more. Okay, they had 1.4 billion. So they are burning through cash like crazy. Okay, but it's still a lot of cash. Okay, there's still a lot of cash for them to make some moves and then start like generating more revenue, up until when this net income becomes zero or even start profitability, because that's what I'm going to be betting in the next couple of years that it's going to happen. What else here? Let me show you something else here. So comparing to, RYB, it's another penny stocks as well, Chinese penny stock that's kind of in the same segment, which is education. So as we can see right here, just in the past week, they've been rising up in value like crazy. Okay, so they're up 135% just in the past 3 months. We're only up 17%. Let me look at another one right here, METX. Yep, so METX is up about 43%, and we're only up about 17%. The segment that the stock is in will see a growth within the next few months to a couple of years, and we're gonna start seeing rising in price if everything goes right with the stock. Okay, so this week we do have earnings, so hopefully they beat it. Quarter four 2019 they beat it. First quarter 2020 they beat it. Uh, Second quarter 2020, I feel like everybody missed that. Quarter two 2020, that was pretty rough. But quarter three they beat it, and I'm expecting quarter four that they're gonna beat it as well. But just keep that on our radar. Don't go all in. I'm not all in. I only have about 1,300 shares, and the public float is pretty good. It only at 40 million. That Market Watch says. I think it's a little bit less or a little bit more than that. I think just a little bit more. And then like the total outstanding shares, I believe it's like 100 something million, which is pretty good. So keep that in mind. And institutions investment, I think institutions right now are holding about 12% of everything, so that's even better. Yeah, just keep that in mind. Just a quick update on my view on SDG. I believe that they're gonna still see growth in the future, especially like with how much money they have, and also they've been partnering with a lot of universities, so that's something that to keep in mind as well. In terms of revenue that can start growing with time. So yeah, I'm not worried about the stock right now. Stock price is just stock price, and if the underlying business, if I'm looking at it right now, I know they're still the net income is still not there, but I believe that they have already partnerships in place that will help this grow and come back to a profitability level, hopefully in the near future. But yeah, that's just my take on STG. Again, only about 2.7% of my portfolio, so obviously that's not a big hit. I'm on it, so I'm willing to take the risk on it. But this is how you should kind of look at it, because again, penny stocks are at the end of the day very risky. But guys, that's pretty much it. Thank you for watching, and if you haven't already, please go ahead and subscribe, comment, and like, and let me know if you liked the video. All right guys, I'll see you soon. Bye.